Welcome to Investor Web, the go-to channel for investment strategies and wealth-building tips. Our mission is to enlighten you with the best strategies to build your wealth by providing insights into various investment opportunities and helping you navigate the often complex world of finance. We are here to help you understand the power of smart investments and the potential they hold for rapid wealth accumulation. So sit back, relax, and let's explore the financial universe together. Today we delve into the secret of building wealth fast. Wealth isn't just about having a lot of money. It's a common misconception that wealth and money are synonymous. While money is a component of wealth, they are not the same. Wealth is an accumulation of resources or value. It could be in the form of properties, businesses, stocks, or even knowledge that can generate income. Think of money as a tool, and wealth as the outcome of how effectively that tool is used. A person can have a lot of money, but if they squander it or fail to invest it wisely, they won't amass wealth. Here's where assets come into play. Assets are crucial as they generate income or appreciate over time, contributing to your wealth. Owning assets like real estate or stocks can provide you with additional income streams and financial security. Wealth also provides financial security because it's about having your money work for you rather than you working for your money. So, how can one build this wealth fast? The first secret to building wealth fast is understanding the power of compound interest. Now, let's dive into the captivating world of compound interest. At its core, compound interest is interest on interest. It's the snowball effect of your money. Imagine you're rolling a snowball down a hill. As it rolls, it gathers more snow, increasing its size. The further it rolls, the larger it becomes. This is exactly how compound interest works. When you invest your money, you earn interest. The next time interest is calculated, it's done on the original amount plus the interest you've already earned. Your wealth, like the snowball, grows larger and faster as it rolls down the hill. Let's put this into perspective with a simple example. Assume you invest a sum of $1,000 at an annual interest rate of 5%. After 1 year, you'd earn $50 in interest. Now here's where the magic happens. In the second year, you're not just earning interest on your initial $1,000, but also on the $50 you earned in the first year. So, your interest for the second year would be $52.50, not just $50. This might seem like small change now, but imagine the impact over 20, 30, 40 years. This is why Albert Einstein famously called compound interest the eighth wonder of the world. He who understands it, earns it, while he who doesn't, pays it. It's a powerful tool in your wealth-building arsenal. The more time your money has to compound, the more wealth you can accumulate. But remember, the key to fully harnessing the power of compound interest is patience. It's not a get-rich-quick scheme, but rather a get-rich-surely strategy. It requires time and consistent investment. The earlier you start, the more time your money has to grow. But compound interest isn't the only secret. There are other strategies and tools you can leverage to accelerate your wealth-building journey. Stay tuned as we delve into these in the following scenes. The second secret is the diversification of investment. Now, to put it simply, diversification means spreading your investments across a variety of assets. Picture it as a buffet dinner. Instead of piling your plate with just the roast beef, you're making room for a bit of everything. You have a smidgen of salad, a spoonful of soup, a chunk of chicken, and yes, a slice of the roast. That's diversification in the world of investments. But why is it important, you ask? Well, just like our buffet dinner, having a bit of everything provides balance. In the financial world, this balance helps to minimize risk. If one asset doesn't perform well, you have others that might. It's a safety net, a buffer against the unpredictability of the markets. However, diversification isn't just about owning different types of assets. It's also about having investments in different industries, regions, and with varying levels of risk. It's about not putting all your eggs in one basket, as the old saying goes. And how can diversification help build wealth faster? It's pretty straightforward. By spreading your investments, you're more likely to have a stake in the sector that next takes off. You're also less likely to lose everything if one industry takes a tumble. Essentially, diversification can help you achieve more consistent returns over time, which can accelerate the growth of your wealth. Of course, diversification isn't a guarantee against loss. There's no such thing in the world of investments, but it does offer a layer of protection. It's like an insurance policy for your portfolio. And remember, diversification isn't a set-it-and-forget-it strategy. It requires regular review and adjustment to ensure your investment mix continues to align with your financial goals. Diversification alone, however, isn't enough. The third secret is about consistency in savings and investments. Consistency is the key to unlocking the door to wealth. It's not about the amount you save or invest at any given moment, but the regularity with which you do it. Even the smallest savings, when accumulated over a long period, can lead to considerable wealth. This is due to the power of compound interest, which we discussed in the previous scene. Imagine a snowball rolling down a hill. At first it's small, but as it rolls down, it gathers more snow and becomes larger. This is similar to how your savings and investments work. The more you save and invest consistently, the more your wealth grows over time. Now, you might be thinking, why is starting early so important? Well, the answer lies in the magic of time. The longer your money is invested, the more time it has to grow. Each year's gains can generate their own gains the next year, a powerful wealth-building phenomenon known as compounding. Let's put it this way, if you start saving and investing in your 20s, you have 40 or more years for your wealth to grow. But if you wait until your 40s to start, you cut that potential growth time in half. And it's not just about time. It's about developing a habit. When you start early, you instill a habit of saving and investing that can last a lifetime. This habit ensures that you're regularly contributing to your wealth, allowing it to grow steadily and surely. But remember, consistency requires discipline. It's easy to be tempted to skip a month or two, especially when times are tough. But it's during these challenging times that consistency becomes even more critical. And patience, dear friends, is equally important. Wealth building isn't a sprint, it's a marathon. It's about the long game, about steadily accumulating wealth over decades, not days or months. So don't be discouraged if you don't see immediate results. Stay the course, remain consistent, and let time do its magic. These secrets are simple, but they require discipline and patience. Building wealth fast is achievable with the right strategies. Let's take a moment to recap what we've discussed today. Firstly, we explored the concept of wealth, a term often misunderstood. Wealth isn't just about having a lot of money, it's about having assets that generate income over time. It's an accumulation of resources that provides security, opens up opportunities, and gives you the freedom to live life on your own terms. Following that, we delved into the power of compound interest. This is a simple yet powerful concept that can work wonders for your wealth-building journey. Compound interest is essentially interest on interest, and it allows your wealth to grow exponentially over time. The key here is to start early and let your money work for you, rather than you working for your money. Next, we discussed the importance of diversification in investments. Diversification, or spreading your investments across various asset classes, is a proven strategy to minimize risk and optimize returns. It's like not putting all your eggs in one basket. A well-diversified portfolio can withstand market volatility and ensure steady growth of your wealth over time. Then, we emphasize the role of consistent savings and investments. It's not about how much you earn, it's about how much you save and invest. Consistency is key here. Regular savings and investments, no matter how small, can accumulate into substantial wealth over time. It's a disciplined approach that requires patience, but certainly pays off in the long run. So there you have it. The secret to building wealth fast isn't really a secret. It's about understanding the true concept of wealth, leveraging the power of compound interest, diversifying your investments, and making consistent savings and investments. It's a journey, not a sprint. It requires patience, discipline, and the right strategies. This journey might seem daunting at first, but remember, every step, no matter how small, is a step towards your financial freedom. And with the right knowledge and strategies, you can certainly accelerate your wealth-building journey. Remember to subscribe to Investor Web for more tips and strategies on wealth building. Your journey to financial freedom starts here.